Hi everyone and welcome to another edition of Between the Lines Live. I'm here in our WA corporate office, so it's great to be here in Perth and speaking with Brett Wilkins. Brett is our Director of Capital Markets here at Ray White Commercial WA, so welcome Brett.
Thank you, Vanessa.
So exciting to be here. I love coming over to Perth and seeing the team and seeing what's going on. Always so much development going on in the city in particular. But we'll start by with introduction to Brett. Brett is the man who has done the largest WA commercial transaction, being Jandakot Airport. So congratulations, Brett.
Thank you. No, it was a good deal.
Yeah.
Sort of a few celebrations as a result of that. 1.3 billion.
Yeah, that's a big deal, isn't it?
Yeah.
Yeah, so that was pretty exciting. But talking about that, I thought today we could just chat about all things commercial property that's happening here in Perth and even kind of some flow of funds that are coming around the country. But let's get stuck in. So let's start with industrial. Let's go with that, because industrial seems to be the asset class that has done the best during COVID, as we know.
Yeah.
Vacancies still remain very, very low, not an awful lot of new supply. All those kind of factors are happening. However, things have changed a little bit. Still activity going on. What can you tell us about what's happening in that market?
It's definitely still the hottest asset class out, same as I think throughout Australia. Vacancies more or less zero, 0 point something. Good demand, solid demand on the back of mining and general economic activity. Yes, yields, we think yields are blown out, but because there hasn't been enough transactions. But that's been more than overcome by increased rentals.
That's right.
But strong demand from owner-occupiers and investors.
We're seeing owner-occupiers jump in just to shelter from those huge increases of rents. The ability to buy through their self-managed super funds, and because obviously financing was very, very cheap. So are we still seeing owner-occupiers in the market now?
Yeah, definitely.
Yep.
And I don't generally deal with vacant industrial, but every now and then, not that long ago, you get a request from a friend of a friend sort of thing to help them out because I've got some situation with an industrial property and you need to find me something that I can buy.
Yeah.
And that is just really difficult. But no, industrial's holding up really well.
And how about the big kind of institutional end of the market? You don't often have an awful lot of large industrial transactions that occur every year. Not much really kind of going on right now.
No, and that was the problem with the Jandakot Airport deal that because Dexus came to me and said they wanted to spend $1 billion on Perth industrial. The majority of Perth industrial, especially at that time, is held by a few families. So there's a lot of the institutions still want to spend the money here, and you've had GIC come in, Arrow Capital, ESR, so they're here, and if they could get something of size, then they want to spend.
So the ownership profile that we're seeing here in WA is actually quite different to what we see on the East Coast.
Yes.
Is that fair to say?
Yeah, very much so.
And how about when you talk about foreign buyers as well, because you spend a bit of time in Asia and you have good relationships with some of that foreign investment coming in. Is that still occurring in the current marketplace?
Yeah, look, it is. Traditionally Perth is home for Indonesia, Singapore, Malaysian money. Not much from Hong Kong, China or elsewhere, and then traditionally Singapore. And a lot of the European funds still come in via Singapore anyway. COVID obviously stopped that for a few years, but the Singaporean money is definitely starting to look, and they want to buy in Perth, but transaction activity in the last 6 months has obviously slowed down.
And those Singaporean buyers, they tend to favour that hotel market as well, so not necessarily industrial, yeah?
Yeah, some of them get more adventurous. I mean, always go, the joke when I go to Singapore, and I generally go up there every 2 months, is most Singaporeans are just addicted to Perth hotels.
Yeah.
They just love them.
Yeah, and you've had some nice new ones recently too.
Yeah. Look, they're doing, shopping centres, industrial, all sorts of that, vineyards.
Oh, all different things.
Yeah.
So just back to industrial for a second. With that vacancy so low and demand kind of holding up, what are we seeing in this kind of new supply space? Because obviously the cost of construction is very high.
Yeah.
It still remains high. Look, it's not going to come back down. Just the level of growth has moderated. So where do we see that kind of segment of the market?
Look, there is industrial supply being added, but there's a shortage of industrial land. And you've got to go a long way out now for some of the industrial subdivisions. But there is construction activity happening there because to a fair degree, the rents and the demand just overcome the obstacles on the construction
Yeah,
issues.
well, I suppose that sets a new kind of economic rent, if you like,
Yeah.
because it costs to build. So if you're building something, you need to achieve that rent in order for it
Absolutely.
to stack up.
And the industrial market will support that.
Yeah.
I mean, there's other areas of the market where the pricing and the demand just doesn't support the new construction costs.
Yeah, so we're in a kind of a different dynamic for the industrial market. We still have good demand, which has kind of fueled this kind of rental appreciation. Like, it's not as much as it has been in the last year or 2 years, but it's still positive. However, we're seeing yields grow as well, but that's really off the back of the whole financing piece. Like that gap, that spread between bond and yield is just not there. So that has to kind of move up. So it's kind of, they don't usually move in the same direction, but they are in this particular part of the market.
Absolutely, and it's just the return back to the funds or the investors.
Yeah. Let's take a change now and have a look at the office market. So the Perth office market has been through a bit of a rough trot over a prolonged period of time. I've written many an office report, and I always kind of see this point where I'm thinking it's about to improve, and then a new building comes online or something kind of happens. More recently, we saw West Perth actually do quite well with kind of move away from CBD markets into suburban markets. But the other thing is that Perth has probably behaved quite differently when it comes to the work from home compared to a lot of the East Coast cities. So that's kind of kept up your occupancy, not necessarily vacancy, but occupancy level higher. What do you think? Are we having is there going to be a resurgence in this office market? Where do you think we're at with it?
Good question. I'm still trying to work that out myself.
Yeah.
There's still reasonable demand for office investments. The demand's there, but just trying to work out where the values are at today.
Yes.
Yes, we've got very high incentives, and they haven't shifted. You keep thinking that they're going to shift and they're going to reduce, but they're still averaging 50%.
Yes.
And in some cases more. And yields have certainly shifted because of the cost of debt, but there hasn't been a lot of transactions.
Yeah, well, there's there's a couple of handful of kind of larger transactions occurring in the last year, which is kind of a lot of that came from money coming from the East Coast as well. The joint partnerships with some local money here as well. So that's good to see. Activity kind of from further abroad has jumped into the Perth market, particularly over the last, let's say, 5 years. A lot more of those kind of speculators from the East Coast coming and having a look at
We've
Perth.
got a lot at all levels of the market here. There's certainly been in the last year increased demand out of the eastern states, from the small private investors right through to some of the institutions. And is that just that it appears to be value for money? I think it's value for money, yield differential, and I think it's also an indication that the WA economy is very strong, and that it's somewhere that they should invest in. Yeah, that's right. Well, WA has really been propping up GDP in Australia for the last little while now. Also, the population growth has remained strong here. Yes. We saw a lot of interstate migration during COVID into WA. So it's so it's definitely holding its own when it comes to the economy. So the office market. How about in that West Perth market? We've seen that market probably contract in size, and that's probably helped that vacancy situation. No, West Perth's strong on the smaller investors and owner-occupiers. Yeah. There's I hate using the word, but a flight to quality. Yes. And some of the West Perth office buildings have been keenly sought after. Also small cap mining. So anything involved with mining, small cap mining, traditionally centred on West Perth, is strong. And we're seeing some of these assets as well. You're talking about that flight to quality. Speaking to some of the leasing guys here, that the activity is particularly strong when they're assets that have, like the end of trip facilities done in them. It has the cafe downstairs. So we're seeing, because there is a higher vacancy in the market, these tenants that are out there can be more selective, and like you said, they can be more competition when it comes to that incentive as well. Yeah. So that's always going to be the case. Look, I've stopped counting how many property cycles I've been through, because I've been doing this for a little while. But there is always that flight to quality. Of course. They come in, the office tenants will move in from the suburbs, they'll come into West Perth, or they'll move out of West Perth and come into the city. They'll move from B grade to A grade, or A grade to premium. Why not? Yeah, that's fair enough. And that will continue to happen. Commercial property is a cyclical market. It keeps on going up and down. And then we'll get to a point which has been a little while ago in Perth then, when all of a sudden vacancies, I remember when vacancies are
Was zero,
and,
yeah.
and office rents were $1,000 a metre.
Yes.
Well, then you get a flight back out to the cheaper suburbs.
Yeah, that's right. And for some businesses though, those locations are prime, and that's why we see a lot of people seek out West Perth, while they could probably be in a much nicer facility here in the CBD. A lot of they prefer the advantage of being in West Perth for be it parking or being close by to other tenants that they.
Some of the new buildings also being developed there are fantastic.
Yeah.
I mean, Gina Reinhardt and Road River, they've bought big development sites in West Perth and another office building a few years ago now.
Yep.
The new ABN building in Leederville is fantastic. So
Yes.
there's no difference in the quality at all.
And that's completely full, and now that's doing a lot for that kind of retail strip.
Yeah,
that's there in
absolutely.
Leederville. Well, let's talk about retail then.
Yeah.
Well, I suppose let's talk about just the smaller retail because we mentioned the strips. Last time we did a retail survey, the vacancies were pretty low in those kind of prime markets.
Yeah.
And a lot of the retail mix probably a little bit different to what we're kind of used to, particularly in the eastern states. A lot of clothing, soft goods still doing well, not just, and food obviously. Food and services being probably the top two growth ones. How are you seeing that smaller retail segment of the market in terms of occupancy and then demand to purchase?
Occupancy's fine.
Okay.
And where most in the retail strips, as distinct from the shopping centres, but in the retail strips, where there are vacancies, in a lot of cases that's just landlords that just don't want to meet the market, or they're more or less just shutting the door and
Worry about it next year.
Yeah. The retail strips are pretty keenly sought after from the tenants and definitely from the investors.
Okay. And what sort of yield range? I suppose there hasn't been many transactions.
There hasn't been enough transactions, but I think retail strips at the moment, depending on which one, it's anything from 5% up to 7% as a generalisation.
Yeah.
I mean, you've still got some retail strips like Napoleon Street, Cottesloe, or Bayview Terrace, Claremont, where the demand from investors looks beyond the current interest rate cycle that we're in at the moment.
Yeah, and their markets there, that vacancies have been pretty much sitting at zero for the last little while, maybe one movement, but not enough to talk about. So really high performing segment of the market. How about for kind of the larger retail? Like there was a handful of retail shopping centre sales in the last 12 months.
Obviously that's gone through a bit of a change when COVID came along, then regional centres and sub-regional centres were on the nose at the time. Neighbourhood or convenience retail is obviously the pick.
Yeah.
Everybody wants a neighbourhood shopping centre.
Is it the drive-in, go to the supermarket, few food establishments, and that's it? Because they seem to be.
Don't forget the liquor store as well.
The liquor store.
Everybody wants a liquor store there.
Yeah.
I mean, I'd get at least 3-4 inquiries every single week about what neighbourhood centres do I have, or Dan Murphy's or something like that.
Yeah, okay.
And I wish I had a lot more, but we don't.
Yeah.
So no, look, they're super popular. But it's interesting to note, not that I sell a lot of regional shopping centres, but they're also back in demand and working. But of course, they're now really entertainment centres, not.
Well, that's the thing. Is what is the future? Well, which is the question in everyone's mouth with what's happening with retail more generally. But I agree with you. I think that they're really going to turn into more of a destination entertainment hub.
Yeah, they are.
Than everyone like online retail. Like it's still a small part of what everyone's spending. However, it is growing.
Yeah.
And we can see the distribution and the kind of industrial facilities to cater for that. But certainly a lot of really weird things in shopping centres now. So lots of climbing facilities, like Ninja Warrior stuff. Not just kind of movies was the only entertainment in the past, but also it's that experience-based retailing too. Like I know that in my local big shopping centre, we've got a Rebel that just got a refurb and it's got like basketball courts in there and a soccer little thing that you can go in there and like play. But if you're trying to find a basketball to save your life, they've got like 3 to choose from. So I think the idea is, like you go there, you muck around with the stuff, but you're not actually necessarily walking out and buying it. You're buying it online, or they're kind of showing you the range.
Yeah, and some of those centres, as far as the eating and the dining that is on, is just fantastic.
It's not just like your little takeaway food court or Chinese. It's a much more kind of nearly fine dining experience.
Oh yeah, no, absolutely.
Yeah,
they're brilliant.
Yeah, retail's an interesting one. Are we still seeing demand from the institutional side for those larger assets?
Yeah.
Okay. And how about yields? Well, we don't again.
Haven't. I mean, there's been a few neighbourhoods sold and a couple of larger district centres sold in the last year or so. And look, yields have blown out a little bit. but there hasn't been enough transactions lately to actually tell you what's happening.
And how about kind of on retail, is that kind of large format or that bulky goods retailing? With housing, the way that housing is everywhere in the country, to be honest, we saw a real resurgence in the residential market, particularly the last couple of years, everyone buying new furniture and wanting stuff. So we saw some kind of pickup in that part of the market.
Yeah.
We're still seeing...
Yes. Yeah, large formats retailing is still super popular from investors and tenants. We've sold one late last year, Drovers Market, 7% return. We've got another couple of offerings coming up soon. Okay. No, still really good demand.
Is that a price point thing? Is there a price point in particular that these kind of the private money is looking at when they're looking at these sort of, not necessarily bulky goods, but
no, not really.
I mean,
obviously some of the privates, you've got some extremely high net worths. So privates versus the syndication market can start to merge in with some of the smaller institutional demand too.
Yeah. One of the other sectors of the market that you've been particularly active in the last couple of years is this kind of medical precincts and medical
healthcare,
assets, healthcare, and healthcare. You know, there's lots of different names for it. We've done a segment on Between the Lines just on this part of the market. Growing needs, growing population, and a wider ranging types of healthcare or life sciences and lots of different private hospitals, public hospitals, or so many things. Where is that not dissimilar here in WA?
Oh, it's huge. So I'd still say that healthcare is up there with industrial as far as the hottest asset class out.
Wow.
Whether it's the hottest or second, but it's huge demand there. I probably sold about $150 million of healthcare properties in the last 2 years.
So who was buying those?
Mainly a couple of funds out of the East Coast.
Okay.
And some Singaporean private investors.
Okay.
Now they were mainly medical centres, but there's been a couple of private hospitals that we sold too. Super strong demand. Hasn't been a lot of activity in the last 6 months. So there's one recent sale in Cottesloe, 5.75%.
Wow.
But no, strong demand. Just requires a lot more knowledge of that marketplace. But yeah, no, super strong demand.
Yeah. Okay. Well, that's
that won't dissipate.
No, I wouldn't imagine that it would. Like, we're seeing demand for all different, be that from all the way that small little specialist suite through to the big kind of
super hospitals.
Yeah, these super hospitals. That's right, which I learned a lot about in that last Between the Lines that we did, where they have all the facilities there in there, and they can take you to the day surgery and everything. There's pretty remarkable asset classes out there, completely new kind of types of assets. Well, we're talking about retail as well. Some of these holes in retail that we're seeing in terms of either in centres or on strips, we did see little medical practices kind of go in there. Is that still a retail that has a medical use, or how does that work? Do you have to have some sort of zoning has to permit that medical use in the retail, or?
No. Most of the retail zonings would allow medical. Where it starts to be a bit of an issue is the parking requirements. So generally, depending on the type of medical, they'll have a higher parking requirement than, say, commercial offices.
And how about things like access, or that doesn't
depends
change?
what we're talking about.
Okay.
I mean,
if it's just like if it's just a local GP office, it's probably
local GP is fine.
Yeah.
But obviously you've got to take into account more of the disabled access, so you've got to consider all of that.
So do you think that we will see more of those if there is vacancies out there in those retail sectors that can be taken up by these kind of medical uses?
I don't think so, to be honest.
Okay.
I think we're more medical's probably going more the way of the super clinics.
Yeah, and just really bespoke, high spec development.
High spec, larger, all-in-one facilities. But then obviously you've still got small neighbourhood GP clinics and that as well.
Yeah, of course. How about childcare? Childcare is another one of those things that probably did kind of fit into some of those vacant spaces.
Childcare's been super hot.
Yeah.
So
where's that on the hierarchy? We've got industrial super hot, we've got medical super hot, and now we've got childcare super hot.
Personally.
Yeah.
Look, I think childcare is not as strong, but it's it's government supported. The demand's not going away.
No.
The cost of construction, however, childcare has a few issues. The cost of construction, the blowout in yields, and then the businesses themselves obviously have wage pressure, regulation pressure. There are some pressure points in that industry.
But we're still seeing demand from investors. I suppose the price point also probably quite attractive to a lot of the smaller privates.
Absolutely. No, very much the small privates. But yields have probably blown out in Perth from high fours to now most of them would start with it. You would have a 6 in the front of it.
Yeah. Well, but understandably,
Yeah.
like the cost of finance has increased
Yeah,
substantially.
absolutely.
So like that's
Yeah.
that's got to happen. That's just
Yeah.
the nature of it. Is can't stay that low forever. And as we know, commercial property is a long-term investment option. There is cycles up and down in those markets. So that's always going to happen.
Yeah.
But yeah, childcare is a super interesting one. We've been following quite closely over the last couple of years, and I think I'd say that all of the states are probably saying very, very similar things. The fact that it's backed by the government with all the all the subsidies and stuff in place make it quite an attractive option.
Yeah.
And like you said, population's not going away. We're seeing...
No, the last stats that just came out a few days ago, Perth's been recording 1,000 new residents a week.
Yeah.
So it's now the fastest growing state in Australia.
There you go.
So really strong population growth, really strong economic activity. So yeah, it's not going away.
Yeah. So interesting times for the Perth market.
Yeah.
And last one I want to talk about is hotels. We mentioned briefly that your Singaporean investors liking that hotel sector.
Yeah.
We've seen tourism around Australia do pretty well the last couple of years, particularly because domestic tourism. Well, obviously you had your borders closed here, but post that period, we saw an awful lot of domestic tourism. Despite the fact that you had so many new hotels being built here in Perth CBD, your occupancy levels have remained very, very high, and your average daily room rates are up. So I can see why the foreign buyers are quite interested in the hotels as an asset class.
Foreign buyers have always liked Perth hotels.
Yeah.
Some of the more private Perth net worths like caravan parks and some of the regional centres.
Yeah.
But
is that a land banking piece?
For some it is.
Yep.
But for others like RAC, they just saw a niche market and have developed upgraded, refurbished caravan parks right around the state.
And I suppose that they're not very expensive to operate a caravan park, so that's another positive.
Apart from the insurances.
Oh, insurances for everything is expensive, no matter what your uses are. I get asked some random questions. I've last month we did a piece on unorthodox commercial asset classes.
I haven't done a lot of brothels. So.
Brothels. And everyone asked me, well, the insurance has got to do, because it started with tattoo parlours as well. Tattoo parlours, that's not an asset class, it's just a user that you have in there. But the insurance is what makes it
But the major problem with some of the insurances are certainly caravan parks, because there was a few flooded and burnt down on the east coast. So insurance companies just come out and go like, oh, we're not doing any more insurance.
Well, a lot of those caravan parks, they're in kind of those large flood-prone kind of areas where you probably can't land bank and redevelop.
And in WA, you've also had a lot of issues, which we've got to take into account when we're trying to sell above the 26 parallel. So anything in the northern part of the state, where you do get cyclones, insurance issues are just a major problem.
Okay. Alrighty, well, this has all been very, very interesting, Brett. I love talking to you. You're just so frank and honest about how things are going in the marketplace. So let's kind of end on what are the opportunities that we see for the remainder of 2023 and into 2024. What is, you've told me what your every single hot market, which can every finger. But where do you see, what's your kind of point on what to look out for? What do you think we're going to see over the next kind of 18 months?
I think some of the vendors are going to have to reprice their expectations or just sit out this particular cycle because there's no doubt that yields have blown out as a result of cost of debt. Now, and for some properties and some investors, they're happy to look further out than the next 2 years. It'd be interesting to see what Jandakot Airport or something would, if I could take that back to market now, because I think that would.
But at the same time, it's such a unique offering. There's not often that an airport comes up for sale.
Oh, no, absolutely. I mean, after I did that deal, I had about 5 or 6 international groups.
So where's another one?
Yeah. And I was like, no, look, next 12, 18 months is a great time to buy.
Yeah.
I mean, I think, we will get inflation back under control. Interest rates will start to drop back. Yield will start to firm again. And anybody that's bought in the next 6 to 9 months is going to look back and say, geez, that was a good deal.
Do you think we're going to see some more distressed stuff into the market, some received sales and things?
I do a lot of insolvency work. It's something that I've really liked doing. There's a little bit increasing back, and I looked at some figures that came out from Areta a couple of days ago actually, where you could see the insolvency activity is slightly increased. But the banks are still generally, as a generalisation, they're generally still being kind.
Yes.
They're not pulling the trigger. They might be putting some pressure on some of their clients. But look, there's a bit of increased activity in the insolvency work, but probably not as much as I would have expected.
Okay. But I think you're right. Particularly that post GFC period, we saw the banks really kind of coming to the party, and you try to prolong where you can. Having to go through that kind of receivership sort of.
The biggest area, which is right across Australia, but certainly here, is anything that's related to construction. Now, whether it's a building company, a supplier to the building company, or a developer that was trying to do some construction, and that's where your real pressure is at the moment. Yeah,
and where do you have an opinion on where you think construction costs are going to go? Because that's a labour piece as well. It's not just the cost of goods.
No, look, I spend a lot of time actually asking others that know a lot more about me than I do about it. Some of the trades costs, certainly some of the early trades, their costs have come down, but the finishing trades haven't. Biggest problem you've also got in WA at the larger end of the market is just the lack of builders.
Yes.
Because 4 or 5 of the major construction companies in WA have disappeared.
Yeah.
So it's not even really, depending on what you're going to build, it's not even a case of, what's the price point, what's the construction cost, it's who do I actually talk to.
Yeah, that's right. It's going to be a super interesting time looking ahead for the commercial market, also residential market, but that's a topic for a whole different day. All really interesting. I'm quite curious to see what happens with the office market myself. You haven't got the same work from home piece as you do in the other states, but your occupancy levels are up, but vacancy, signed leases are still quite high, and you've still got a number of projects coming out of the ground here. So fingers crossed, because I love the Perth office market.
But we've still got
such a beautiful buildings here.
I've still got great demand from Singapore investors for Perth office buildings.
Yeah. Well, like you said, like we've said, like it's cyclical, and it doesn't feel like that long ago, but people probably argue with me that it was 0%. Like I remember those times, like they weren't very long ago at all. Yeah. So that happens, and we've got other markets in the eastern states that are performing exactly the same. They're up quite high, and they were 0% not too long ago either.
Yeah.
But on that note, I'd like to thank you, Brett. I think this has been super informative and really interesting. I really love the Perth market. I think that there's so much going for the state of WA in terms of where you are, where you sit with your GSP, what's happening with population, and there's really a lot of good things to be said about WA, and it's great to see that investment continues to flow from the east coast and from offshore. So
no, I think we'll keep getting a lot more, and it is a great place to invest.
And as Brett said, industrial, medical, childcare, they're the super hot ones, but we like all the asset
One of the
classes.
underrated assets, in my personal opinion, is actually service stations.
Oh, we didn't even talk about service stations.
No.
Quickly, service stations.
I like service stations a lot.
Yeah.
Good ones on good locations.
Yeah.
There's an impediment to competition.
Yes.
There is a future redevelopment option on the good ones.
Of course, yep.
And
main road location.
I don't think everybody is about to start driving around in hovercrafts and spaceships.
No, I agree. That whole EV piece, I think, is totally that's spoken about way more than it really is. If you look at the registered population of vehicles, if you like, it's such a small little blip in, and the government has not gone anywhere very quickly in trying to mandate the use of electric vehicles like we have seen in other countries.
No, I like service stations as an asset class.
Yeah? All over? Doesn't matter where they are?
No, it does, because I'd want to still look at the ones only that are in really good redevelopment sites. So you look at something and go like, it's got a 12, 15-year lease on it, but at the end of all of that, hey, I can go and put a McDonald's or KFC or a liquor store or something like that there. If it all hits the fan. I mean, some of the secondary locations, no, I probably wouldn't touch.
Okay, understand.
But the primary locations, I mean, they're great. And as I said, you can't have another 10 open up in the suburb.
No.
Main roads don't like them, councils don't like them.
Yes.
So there is an impediment to competition.
Yeah. Okay. Well, thank you for throwing. As we were about to wrap up, we just threw another one in a quick service station chat. But thank you very much, Brett. Appreciate your insights and discussions of all things Perth. Love talking about WA and the Perth market. So thanks so much for joining us. My name's Vanessa Rader. I'm the head of research here at Ray White, and you'll join us again next time when we do Between the Lines live webinar. Thanks, Brett.
Thank you.
Thank you.